Hey guys, what's happening? Dan Darrow here with another Options and Play video update. Let's try a short for once here, right? Cats. Today's video is going to talk about cat. Big industrial. Uh, Yesterday was a pretty strong session. Industrials got a little bit of a bump from a positive headline about the ongoing China trade negotiations. Um, Cat had a busy day. This has been a name that's been the position's been open for about a month. It's a good time to revisit the thesis. Talk about targets, stops, and how we're going to be approaching it going forward. So, a highlight of this tape or this market really for the past couple years has been that weak names that are trading below key moving averages tend to stay weak. And Cat falls in that category, but I mean, if you screen for other setups like that, names that are flagging below or at 52-week lows, underneath moving averages, I mean, you're going to find a bunch. Um, and these really have been some of the best short opportunities. Leaning into these types of setups, stocks that are monthly lows, yearly lows, flagging under those moving averages, shorting into those patterns has really led to some nice follow through lower, especially when the market tends to pull back, which it hasn't really had a steep pullback in a little while, but when it finally does, man, these are the types of names that are like the first ones lower. So Cat was was beat up in June. Had a really sharp move lower here, uh, and it broke through what had been pretty important support at that time, around 145. So really sharp move, extended all the way down to like the low 130s, bounced, and it went into earnings below that level. We didn't play it on earnings. Didn't really care for the setup one way or the other. But after it reported, you could see. So this was the day. It had a pretty sharp reversal. It gapped to the 50-day and pulled back, and that's really when it got interesting to us. Because it stalled right at that moving average. It held below. So like the biggest catalyst for the stock in the near term was earnings. It couldn't really restore any strength, so it wasn't able to get back above 145. It failed right at the 50-day, and then it reversed sharply lower, and it was sitting in this lower range again. So that's really at the point where it got interesting to us because it fell into that category of a stock, a weak stock, flagging underneath moving average resistance, recent support. So we wanted to do a swing trade short, looking for a breakdown and new low. So we like the idea of a November 135 to 125 put spread uh, as a bet. And November was a time frame of choice because we like swing bets to go through upcoming catalysts if possible. So in this case, I mean, it just reported at the end of July. So November time frame uh, would be almost guarantee an earnings report. So versus October, which is hit or miss, most likely miss in the sense that it'll probably come after the 19th of expiration. November would almost guarantee that there would be an earnings report within that time frame. So that's why November was the time frame of the trade. Um, so basically, what happened was a few sessions after the trade was initiated, around the 9th, it broke down and had like a really quick move below support and underneath 130, really, really sharp, quick drop. And um, because it was so quick after the trade was initiated, we wanted to wait and see if it extended below 130 again before rolling. And while it may look kind of the chart may look kind of choppy here, and you say like it broke below. How much more do you expect? Well, when you zoom out, you'll see why it was such an interesting looking trade because I mean when it broke below 133, I mean there was like a gap, but it literally just felt like it could really fall apart. I mean like this is like This is like the yearly trade or the yearly time frame on it. So you could see, we wanted to give it a little room because there was so much open room underneath. But coming back to it, you can see that it hammer reversal came right back, and then basically for the past few weeks, it's been chopping around above the 50-day. I mean, obviously, we didn't like the price action overall when it was like hanging above the 50-day here, but it really hadn't cleared any major levels. So it wasn't really above 145, and it hadn't really reset above like this area of support. So there was reason to hold on to it. And then yesterday it popped and got right to the 100-day, and today it's extending a little bit higher. So it's kind of moving north, and now we need to keep an eye on it because it's a slightly above 145, and it's above the 100-day. And really, if it starts to reset here, then like that short potential is probably going to decrease quite a bit because then it'll have reset your support, and it's kind of gradually taking out one moving average after the next on the way up. So right now the way we're looking at this is either maybe like 2 or 3 weeks basing above 145, or if it actually gets above the 200-day, that'll be the line in the sand. So a break above the 200-day will be the stop. That's the point where there's no more moving average resistance above. This thing could really start to rally. So like that'll be the line in the sand. But overall, the reason we can be patient with the name, even as it isn't really breaking down, is because November contracts have that earnings catalyst. So that 135, 125 put spread is holding onto its value relatively well because of the event contained within that time frame. So when you compare the November contracts to the October contracts, the out of the money ones, you can see that the November are actually trading at a higher implied volatility. So you got a few percentage points higher on the November, which typically isn't the case. You usually see higher implied volatility on shorter dated contracts. So that's why pretty often you'll see us push bets out through events, because even though you have to lay out a little bit more for those contracts, typically they'll hold on to their value better, especially for the out of the money contracts. So that's why you'll see us do that. So it's a name we haven't really talked about in a while. Wanted to revisit it, especially as it's kind of moving up a little bit against the idea. But net the thesis still holds, and we wanted to walk through what we're looking at in terms of stops. I mean, clearly, if it starts to break down, we're going to be looking for a retest of 130. But we can talk about that as things develop on the downside. So as always, I'd love to hear from you guys. Please reach out. Questions, comments, anything. Definitely open to answering. If something you want to hear about, I can do it in the video. So definitely reach out. Have a fantastic night, and talk to you tomorrow.